Hello everyone, I am Sharad. I am a businessman and a mutual fund investor, and on this channel I make videos on personal finance. Today I shall talk about shares, what are shares, and what are the advantages of investing in shares. In case you do not know what equity shares are, to put it in simple terms, equity shares are part ownership of a company. So if you buy shares of a company, you become a part owner of a company. Now if a company has say 1 crore shares, and if you buy one single share of that company, you become the owner of 1 crore share of the company. Have you ever wondered how people like Mukesh Ambani, Bill Gates and Ratan Tata have made so much wealth for themselves? Initially, they start a company and they allot shares at the par value of say 10 rupees each to themselves and to their family members and to other promoters. And then they put in the time, money and effort on growing the company. Over a few years or decades, the company grows real big, and then they offload a part of the shares to the public through some process called initial public offer, called IPO, wherein they offload their shares at a huge premium. Say a 10 rupee share will be offered to public like you and me for say 1000 rupees, by which they make money of 990 rupees per share on the shares that they have offloaded, number one. And moreover, the value of the shares that remains with them, which is normally a huge chunk, more than 50% of the shares of the company, the value of that grows by that much amount. But not all of us are cut out to become big businessmen or entrepreneurs. So people like you and me, the next best option is to invest in shares of the companies belonging to such big businessmen. Thus, by owning the shares of that company, you participate in the growth of the company, and when the company grows many-fold over the years, the share price of the company grows and you create big wealth for yourself. Now I will tell you 5 distinct advantages of investing in equity shares. Number 1, equities are the best instruments to create long-term wealth. To create long-term wealth, your investment should grow at a much faster pace than the rate of inflation. So, rate of inflation prevailing in our country nowadays is 5 or 6%. So, if an investment earns 5 or 6% or lesser than that, then you will not be able to create wealth for yourself. But suppose your investment returns say 10 or 15% return per annum over a long period of time, then your investment grows at a much faster pace than the inflation, and you will be able to create huge wealth for yourself. Second point is liquidity. Equity shares can be bought and sold on any working day. Now you take an example of a real estate. Suppose you own a plot of land and for some reason you want to sell that. So what do? You approach a broker. The broker tries to find a buyer for it, and you negotiate the price with the buyer, and finally the whole transaction takes place say after 6 months or 1 year. But unlike that, equity shares, if you want to buy today, you can buy it today itself, or if you want to offload the shares that you have with you, you can sell it today itself. So that's a huge advantage that equity shares have. Third thing is divisibility. Now taking the example of the plot again, suppose you own a 5000 square feet land and for some reason you require a few thousands of rupees or 1 or 2 lakhs of rupees. You cannot sell just a few square feet out of that 5000 square feet land. You cannot say that you can sell say 100 square feet of it or 200 square feet of it. You cannot sell it. But unlike a plot of land, suppose you own 5000 equity shares of a particular company, and if you require a few thousand rupees for some urgent need, you need not liquidate all the 5000 shares that you have. You can sell a few shares to the extent of the amount that you require, and you can retain the remaining shares for yourself. So this is again one big advantage of investing in equities. So fourth advantage is taxation. Unlike salary income and business income, which are taxed at the marginal rate of tax, equity shares are subjected to concessional tax rates. So if you hold the equity shares for more than 1 year, it is considered as a long-term asset, and whatever gain that you get on selling the equity share is subjected to a flat rate of only 10% tax. So no matter whatever tax bracket you are in, even if it is 30%, but still you have to pay only 10% tax. And the fifth important advantage is liability limitation. What is liability limitation? Suppose you buy a share for say 1000 rupees from the market. The maximum liability is 1000 rupees only for you. Suppose the company goes into loss, it goes bankrupt, and the debtors come and ask the company to pay up all the debt. The company cannot come and ask you as the owner, as a part owner of the company, to make do part of the loan of that company. So your maximum liability is restricted only to the amount that you have paid for purchasing that equity share. There are two ways in which you can invest in equity shares. One is a direct mode and the other one is an indirect mode. So in the direct mode, you buy the shares yourself. So you open an account with any broker like say Zerodha and you buy and sell shares using their app. On the other hand, in the indirect mode, you hand over your money to a professional who in turn buys shares for you. So mutual funds are one of the indirect mode of investing wherein you hand over the money to the mutual fund and the mutual fund will in turn invest it in shares on your behalf. I will make a separate video on mutual funds, but to conclude this video, here is my take on equity shares. Over a period of time, I have realized that the best returns can be made by investing money in a business. So in the initial part of my career, I invested my money in my own business, and over a period of time, as my business grew, it started to generate cash profits. My business didn't require this cash anymore, so I was on a lookout to invest that money elsewhere. So that is when I decided to invest in someone else's business. By someone else's business, I mean I started investing in shares. But investing in shares, it is both an art and a science. So you have to do some research as to which company is good, which company is growing, which company is making money. So you have to spend time on it to find out which company is the best to invest. As it was time consuming, I decided to invest in equities through mutual funds. So over the last few decades, I have been investing in equity mutual funds and these have generated ample return to me over time. So my advice to you all is, you must invest in equities. Equities are the best investment vehicles for wealth generation. So if you are in your 20s, you should definitely invest in good company shares. So if you are in a position to analyze the best companies, you do it yourself. But if you find it intimidating, you can hand over your money to a mutual fund and that will generate very good return for you in the long term. So that's all for the video. If you have any video requests, please let me know in the comment box. Subscribe to my channel and I'll see you in the next video. Bye.